good afternoon, and welcome everyone to a special session that we're hosting today on helping you navigate the current trade war, the tariff trade war, and the volatility that we've seen in the market since that has started at the end of last week. So today, what we want to do is discuss, where we currently stand in the broader markets, how we're evaluating the bigger picture, and best practices for identifying trading opportunities in this type of market volatile environment, and and the option strategies that you can utilize in this type of market environment. So let's go ahead and get started. What we do here every single week is to help you trade sustainably and confidently. And this session is really geared towards helping people navigate through this excess volatility that we haven't seen in a long, long time. It's been a very violent few days with regards to market price action. Thursday and Friday were very strong down days. Yesterday was a very volatile day, one of the largest days. If you look at just the size of the candle, we haven't seen days like this since 2008. So it's incredibly difficult to navigate, and I'm sure a lot of investors in this current market condition is concerned about their portfolio, concerned about further downside, and want some guidance as to how to navigate it. And that's why we're hosting the session here today. Now, what we are going to discuss today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we'll use as example purposes during today's session. So we'll start off by just taking a look at kind of where the current equity market looks and what our general outlook is from that. We'll take a look at kind of market crash stats. It's important to understand the statistics to understand how to put these things in your favor. We'll talk a little bit about bearish trade timing, a trading checklist for trading during bear markets or kind of a trade war. We'll take a look at how to find ideas in this market environment, the option strategies that you can deploy in this type of market environment, and then we'll open this up for Q&A here at the very end. But largely what I want to help you understand is how to master 3 of the option strategies to profit from a market crash, understand the mechanics of each one, and kind of review the best practices for entry and exit for those specific strategies. And as always, these sessions are recorded. So if you want access to the recording or access to the tools that I'll be showing you during today's session, sign up for a free trial for 30 days at optionsplay.com/signup, or you can just point your phone to the QR code on your screen to sign up for a free 30-day trial to everything that I'll be showing you during today's session. And that will give you access to the recording after we finish, along with the slides, so that you can watch at your own pace and make sure you understand it before you try to start implementing any of these strategies for your portfolio. So let's just kind of briefly review where we currently sit on the S&P 500. This is something we talked about yesterday during our macro trade idea session on Monday morning. If you're joining us for the first time, once you sign up for your free trial, you will have access to our Monday morning trade ideas webinar session, which is before the open on Monday morning. And we go over macro view of the market, as well as look at the ideas that we have here for the week. Now, yesterday, we did focus more of our attention on the macro aspect of things because of the current market environment that we're in. We spoke about the fact that implied correlations, meaning the correlation between S&P 500 stocks, nearly doubled in the last couple of trading sessions, meaning stocks are getting much more correlated these days. So as markets decline, all stocks move lower. As markets rise, all stocks move higher. So we're seeing a lot of that type of price action where all stocks are sort of moving in tandem with each other, which creates an environment that is more suitable for trading index ETFs rather than individual stocks. So trading things like SPYRQs rather than trading individual stocks as correlations rise. As they decline, that's when it's better to be a stock picker. So we find ourselves in this position where we've had this very violent sell-off here below 5,500 on the back of the tariff news. We broke below that level here on Thursday. Friday, after China chose to retaliate very quickly, things turned much uglier on Friday. And what's interesting is that if you look at yesterday's price action, as you can see, we traded between 48.50 and 52.50. So that's a pretty sizable range on the S&P 500. We're talking about 400 points on the S&P 500. That's nearly 8% of the ETF's value that we saw swing intraday yesterday, despite closing nearly flat on the day. So just a quick review of kind of where we currently sit, right? The US started with the first round of tariffs on Wednesday night, Thursday morning. China quickly retaliated by Friday morning. So the two largest trading partners in the world have effectively fired their first shots in this trade war. And that is largely going to have the biggest impact here on the broader markets is how much further will US and China continue to go to retaliate against each other on this trade war. That is largely the question that is impossible to answer, but the question that we have to pay attention to over the next few weeks to gauge overall market sentiment. I would say after the first two biggest trading partners in the world fired their initial shots, markets certainly panicked because there was the concern that other trading partners were going to retaliate, and that was just going to get it into a full-on global trade war. And basically applying what has happened between the U.S. and between U.S. and Canada to the rest of the world. I would say over the last couple of days, the market has sort of digested that risk is less likely, that most trading partners have seemingly tried to make concessions to the US to get them to lower their tariffs. An example of that is Vietnam offering to move all of their tariffs from US imported goods to 0%. That has not led to a deal in itself, but it seems like there are far fewer countries that are kind of putting down their firm foot and choosing to retaliate rather than looking at opportunities or ways to negotiate. So I would say that the fact that we haven't seen a strong number or a large number of countries retaliate from a tariff perspective is what's giving the market the ammunition today to rally a bit and breathe a little bit and basically say perhaps we overreacted a little bit on Friday and Monday, that they want to give countries the benefit of the doubt that they are going to negotiate in good faith to try to lower the tariffs for those specific countries. I'm not particularly sure that that is what will transpire. And it's really difficult to guess what will transpire on that front. But the one thing I can say is that when you see the VIX spike the way that it did, intraday we got all the way up to about the 60 level here. We closed around 48 yesterday, and now we're closing, right now we're around 40% or so on the VIX. So still very elevated. If you think about kind of where we closed yesterday, it's one of the highest closing readings we've had on the VIX going back to the pandemic was the last time that we saw a close higher than the one that we saw yesterday. And on top of that, when we get spikes in VIX like we did earlier this week and at the end of last week, they do typically point to temporary bounce opportunities in the market, like we're getting here today, but typically they don't represent an actual market bottom. Meaning, many times when you get violent sell-offs like we've had in the past few days, they typically are followed by a day or two or three with some rallies here in the overall markets, and subsequently you tend to trade lower and find an actual bottom sometimes 1 to 2 months later. So that's where we currently sit here right now, and the the calculus that equity investors have to do at this point is think about how do tariffs affect the overall market and sort of the individual companies that you might be invested in or have positions in, and how do you balance that with how do you balance that with kind of the downside risk that still remains here with the equity markets, because the the change has largely been in expectations for a slowdown, meaning expectations of a recession coming up, meaning right now the concern is not necessarily um, the damage that the tariffs themselves do, but more so along the lines of how far does it go to deteriorate consumer confidence, which is going to show itself in the form of reduced consumer spending. That's definitely one of the areas that we are most concerned about here right now is, the tariffs may end up being perhaps less impactful than the markets are sort of implying at the moment, but the area that the market is not fully, I would say, priced in at the moment is if consumer confidence continues to sour and consumers stop consuming at the rate that they have been, which there's clearly already signs of that over the last couple of months. That could have a pretty material downside risk to the US equity markets, because right now, we've pulled back fairly significantly in equities, but we've only pulled back to what is effectively the average forward PE ratio over the past 10 years. And we tend to find that during bear markets, we tend to go below average during bear markets. So there's a lot to digest here. Rates are another thing to consider. The 10-year yield is back well above 4% here after yesterday tumbling below 4%. And that really speaks to the fact that the Fed has a lot of work to do before they might consider cutting rates. But if the US economy were to slow down sufficiently, they might be forced to cut rates to support the overall economy. We're not quite there yet. We're certainly, the hard data that the Federal Reserve relies on to make these decisions aren't coming out until March and April. So I'm sorry, April and May. And so it's definitely going to be a bit of time before potentially we could see the Fed lower interest rates. And in that time, a lot can happen, including in the bond market right now. If you look at treasuries, you sort of expect in this type of market environment, as equities sell off, that that treasuries are in demand as people sell off risk assets and buy less risky assets like U.S. bonds. But we're not quite seeing that, and that really speaks to the overall risk that these tariffs have on the safety of the U.S. government bonds. Up until a few days ago, there really isn't a question as to the safety of U.S. bonds, from a risk-free rate perspective. But we are now entering a territory that's a little bit uncharted from that front, because as we know, the debts, the amount of debt that the U.S. has continues to rise, and with interest rates not necessarily coming down, the cost of servicing that debt becomes increasingly unsustainable, to the point where different counties are trying different methods to raise capital in order to um, provide that. But at the moment, it's definitely something that is um, concerning as to the safety of treasuries, because we've kind of taken that for granted for decades now, that the U.S. Treasury bond is effectively risk-free. However, at the moment, there's some concerns that based on the level of debt that the U.S. government has taken on and the amount of interest it takes to service that debt, if interest rates don't decline, the serviceability of that debt becomes more and more of an issue here right now. So this is really a lot to take on. It's a lot to navigate, which is why we are here every single day over the next few weeks to help you navigate through this. We'll be sending you daily updates on the broader markets and kind of any news on the tariff front that's going to influence our macro view of the markets. And at the same time, we will be sending you daily updates on where the current market is, specifically for trading 0 days to expiration strategies. That's the webinar that I'll be hosting tomorrow at the same time to walk you through, because these markets are moving so fast, you might have one day where we're up 3%, and the very next day we could be down 5%. The very next day we could be up 2%. So we really have to stay incredibly nimble. And for those of you that want to stay nimble and want to trade options, we are now providing daily updates, from a day trading perspective at 10 a.m. If you're a member or if you have a free trial, you will receive that email from us at 10 a.m. to give you a look at the market internals underneath the hood and what it's telling us for the day. So I'll be covering more of that here during tomorrow's session, and I hope to see many of you there. Regardless, what we're doing is daily updates on the markets through the daily play that we publish for members. So you'll get an update on the macro picture, you'll get an update on kind of any news in terms of the tariff front, and then sending you our daily trading signals using options, as well as an update that we have for the equity research portion so that you can find ideas where the technicals and fundamentals align with each other. So let's just talk a little bit about bear market stats here. A bear market is defined by a market that's dropped by more than 20% from the peak with higher market volatility. We haven't entered bear market territory just yet on the S&P 500, but we're not far. One thing to really remember is that statistically speaking, markets move higher 60% of the time and move lower 40% of the time. So if you're going to take bearish positions, if you want bearish exposure in the markets, you typically need to time them more accurately than you might need to do them on long trades, because bearish trades don't last as long. They tend to be quick, fast, and violent, but they're not long, steady moves to the upside or to the downside. So it tends to lend itself better for trading options, but it's really important to understand, statistically speaking, when you're trading bearish opportunities, you do lose a bit of an edge because of the fact that stocks only move down about 40% of the time versus 60% of the time they tend to move higher. And the last thing is really no surprise to everyone who's probably watched the markets over the last couple of days, but markets tend to sell off much faster than they climb on the rallies. But basically, when you're in a market crash, you're going to see opportunities on both sides. It's not going to be a one-way street. Yesterday's a prime example of that. Today's another good example of that, where you're going to have opportunities on both sides, on bullish and bearish sides. So it's important that you understand how to access the tools to help you identify bullish and bearish stocks to trade using this tool. Okay, so When it comes to timing a bearish trade, this is really, in my opinion, one of the most important things for if you're going to try to chase or trade bearish views during this type of volatile market environment. And that's the fact that risk reward favors waiting for rallies to enter a bearish position. It's very common that people try to enter bearish positions when it kind of breaks a support level or kind of starts to underperform, right? So for example, if it breaks kind of down into this $64, $65 range here, that's an opportunity to short. However, if you actually look at kind of these particular strategies, the win rates and the returns on them, you tend to find that it's far better when after a stock breaks below support, that you wait until it kind of resumes it back towards resistance or it rallies a little bit, and wait for those rallies to enter your bearish trade. You're going to get a much faster return on investment using that type of strategy. And you're also going to get your timing far better. So you're going to risk less to potentially make more when you use the conjunction of technical and fundamental analysis together with each other. And I want to show you some of the tools that we have available here at OptionsPlay to help you do exactly that, so that what you're doing is that you are waiting for rallies in stocks that you want to take a bearish view on. You can use various technical indicators to help you determine when something is overbought in order to sell, and then prior support turns into new resistance provides, a good entry for shorts. So these are all kind of best practices for trading short positions, is that you definitely want to wait for a rally back to a prior resistance level if possible before you look at entering a bearish trade. The statistics on other types of bearish trades are just not very strong. So for example, if you use a bearish counter trend strategy, or if let's say you are looking at a bearish trade because it just broke below a major support level, we tend to find that those are not as effective as trades as what is effectively a trend following trade for a bearish opportunity. So let's kind of take a look at this point, some of the this is a bit of a cheat sheet that we have here for trading volatile markets with options. Generally speaking, selling options have an advantage in this high volatility environment, and volatility is extremely juiced up. So selling premium is definitely going to have a higher edge when you're doing it in high volatility environments and high volatility stocks. At the same time, because of the statistics that we're referring to, where bearish trades don't tend to last as long, trading shorter dated options is a more preferred strategy when you're using kind of these bearish trades from our platform. And if you are thinking about taking a bearish exposure on a specific stock, take a look at using a spread. That's going to help you reduce the amount of capital required. It's going to reduce the it's going to reduce the capital required. It's going to reduce the overall risk of the trade. So trading spreads have some pretty significant benefits that you can derive from trading spreads. And then lastly, what you want to do is you want to try to identify overvalued stocks or undervalued stocks with the optimal trade entry. And I'll show you how to do that here in a couple of seconds on the platform itself. But my goal here today is to help walk you through the tools that are available to you on the OptionsPlay platform to help you identify bearish opportunities in this type of market. So the first thing you do is when you go to the ideas platform, you have two, I think the easiest thing to do is just search by or filter the trade ideas. Now, in this type of market environment, the most important thing really is to trade something that's very liquid. You don't want to trade something that's not liquid in this type of market environment. Otherwise, you're going to have a tough time getting in and out. So something that's either very liquid or somewhat liquid is a good starting point. Let's take a look at bearish opportunities here right now. And like I said, we're not going to look at counter trend. We're just going to look at trend following ideas. And let's start there. There's not a lot of choices here for today. And I think that's fairly obvious as to why, because the stock market needs to bounce in order for us to get an opportunity to enter a bearish position. So with that in mind, we don't have a lot of bearish positions to show you here for today, but we are going to use this tool to help us identify the trades that go out in your Monday and Thursday reports. And the goal here is to do those reports on a more frequent basis so that you can get access to these trade ideas on a weekly basis. Okay, so couple of things that I did want to show you, right? So, if you're looking for bearish opportunities, make sure that you deselect counter trend, because in this particular example, I think for bearish trades, you definitely want to trade a trend following trade when it comes to bearish trades, which means that you wait for a support to be broken, you're being patient, and you wait for it to rally back up towards that support level, which now acts as resistance, to use that as your trade entry on a bearish trade. But on days like today, when markets have kind of fallen violently over the last couple of days, you tend to have bounces in the overall market. So, to try to play for those bounces, you generally want to just basically look at bullish. You can look at counter trend. You look at a trend following. I would definitely take out not liquid, and then basically use that as a way to filter out some trades. So let's just take a look at some of the most liquid stocks that are either following a trend or trading counter trend. So we'll take a look at kind of those ideas, and take a look at which ones are currently holding up. So let's look at Boeing, for example. Boeing's a great example where the fundamentals align with the technicals here. So let's take a look at kind of where we sit. So Boeing, this is a bullish counter trend idea, which you can tell by looking at the plain English sentence here at the bottom that helps you explain why we have a bullish view here on Boeing. And what's interesting here is that Boeing is kind of at a point where we're near prior support that's now turned into resistance. And the question is whether or not this has the momentum and follow through to break out above, the downside level here on the S&P on Boeing, but this could easily just turn lower here from here as it reaches this resistance level here and turn lower. So this is a tough one to call here, and which is why we are making daily updates to the market and giving you a sense for what do the market internals look like and what directional view might you want to take here for today. Based on what we're seeing here overall, if you look at the S&P 500, things were pretty strong here at the start here, but things have really deteriorated a little bit since we started the session around noon. So there's a higher likelihood now that we could trade back down towards the 505 closing level that we closed at yesterday here on SPY. So in this particular case, some of these bullish opportunities might very well easily turn into bearish opportunities quite quickly. So we'll continue to monitor that, but it's really important that you understand how to use the filtering and sorting tools within OptionsPlay to help you find the best opportunities. We also have a watch list of what we consider as overvalued and undervalued stocks. And this is using the same methodology that I publish my Monday morning and Thursday morning trade idea session, where we look at the valuation of the stock and compare it to the profitability and the growth metrics of the stock to determine whether a stock is potentially overvalued or undervalued. We have about 65 names here in this particular list. So for example, if we're looking at overvalued stocks, we can even click on this button that basically shows us which stocks in our overvalued list is also triggered a trade idea here for today. And that's going to help you identify stocks where the timing aligns with the fundamentals of the stock as much as possible. So those are some of the tools that we recently released into the OptionsPlay platform to help you find, potential trading ideas and trading opportunities using the OptionsPlay platform that comes with your free trial or your membership if your free trial has expired. Okay, so let's take a look at a couple of the trade ideas. First thing I want to take a look at it here is a credit spread. So for example, if you're looking at a trade idea, and let's go back to some stocks. Let's take a look at maybe JP Morgan. Let's say you want to take a bearish view here on JP Morgan, and the chart here looks very similar to a lot of other charts, right? Basically, what you have is a breakdown here below support that we're now back to retest as a resistance. And the concern is maybe there's some further downside here in JP Morgan. You can basically take that in any of these specific names. Amazon's another one that we currently have a bearish view on. Apple's another one we have a bearish view on. And the question is whether or not this bounce here provides an opportunity for sellers. Looking at Apple, Apple hasn't quite recovered here, so looking a lot weaker here. Let's just go with JP Morgan here for 1 second here. So what we have is a breakdown here below that 225 support level, say. We broke below it, and now we're coming to retest this level as resistance. And the question is whether or not this can start moving lower going forward. But if you wanted to set up a credit spread, you can use the high implied volatility strategies on OptionsPlay. And what that will do is it will instantly create the credit spread for JP Morgan. Now it's going to create both a bullish and bearish credit spread. But obviously, in this particular example, we're going to look at a bearish opportunity here on JP Morgan. And what you can do is you can always take a look at kind of the stats of the strategy before you go ahead and place that order. So as you can see, selling the May 23rd, 225, 245 call vertical will collect $8.60. On a $20 wide credit spread, that means you're collecting over 40% of the width. You're collecting 3% of the width that you're collecting here, which is a very strong risk to reward on a credit spread. This is one that looks quite attractive across the board. Both from a timing perspective, right? And that's really kind of the key here for trading bear markets is that you can't just identify overvalued stocks and start shorting all of them. What you really need to do is find overvalued stocks where the timing is most optimal to enter that trade from a bearish perspective. And that's exactly what our platform is designed to help you do, is to help you know when, from a timing perspective, is it optimal to enter a bullish or bearish position. And you currently happen to have one of those positions right now in JP Morgan, where the trends are clearly bearish. It's broken below support. It is an overvalued stock from a fundamental perspective, and the fact that it broke below support is now retesting as resistance. With earnings coming up this week, that could be a potential catalyst that drives JP Morgan Chase lower. But the goal here is to make sure that we answer your questions with regards to, how do you navigate a bear market? What strategies do you use? And how do you find the ideas to, to start timing your bearish trades as profitably as possible? So in this particular case, what we're selling is at 225, 245 a call vertical here. And one of the things that we have available to you, especially if you're new to this type of trading, or if you're finding that the markets are a little bit too volatile and you need practice, is you can use our tool to create any portfolio within OptionsPlay. It could be mimicking your live Schwab portfolio, your Fidelity portfolio, or it could just be a completely fictitious portfolio or completely fictitious trades and portfolios that you can basically follow along and learn and get a better sense for how options work before you start risking your real capital on it. So here's what I have with regard to this. And if let's say you are looking to trade this May 23rd, 225, 245 call vertical to collect $8.60, what you can do is you can simply select a portfolio. So let's say I select my paper trading portfolio and I click on add position. And what it does is it adds that position in my portfolio tool that I can go back and analyze at a later time. So for example, if I entered this trade and a couple of days later, the market moves lower and I'm thinking about closing out my position, well, coming back to portfolio will help you calculate your total P&L percentage, and that's going to help you determine whether or not it's time to continue doing this or potentially moving on to something else. And then with regards to credit spreads, there's generally speaking three different rules for managing a credit spread. You can either reach a take profit level or a stop loss level, or if your credit spread reaches 21 days to expiration without triggering the stop loss or the take profit trigger, then you also need to consider closing out a credit spread. So in terms of rules, credit spreads are definitely on the more complex side of things, which is why we created this cheat sheet to help you remember this. But basically, if you collect more than 50% of the total maximum gain on a credit spread, and you still have 2 to 3 weeks left or more, it's time to take your profits and look at either recentering the credit spread and collecting more downside, or choosing to close out the trade altogether. In this type of market environment, it's really difficult to know exactly what to do when things move so quickly, which is why it's important that you learn now and start practicing so that by the time you're ready to trade, you already have all of this stuff down pat and you have this memorized, and you can just go straight into trading and not have to figure out all of these steps one by one manually. The other strategy that you can use is a debit spread. A debit spread is really very, quite useful in this type of market environment when you're expecting a stock to make a big move. And with VIX, trading around 41%, the expectation is that you're likely going to see some big swings here over the next couple of weeks, and that's going to provide some interesting opportunities here as well. But the last thing I wanted to show you here is one thing that we built at the OptionsPlay is that, in these types of environments, you will almost always find days that are, strong bounce candidates. And that's really kind of where I turn to the undervalued stocks list under my watch list. And again, I'm going to filter only by the stocks that have a trade idea today, because I don't really care that there are 66 undervalued stocks in the market. What I care is how many of them have buy signals today. And that is what is going to go into that's what's going to go into the weekly research, as well as the daily trading signals that we're going to be sending out, are these ideas where we identify undervalued stocks that also have triggered a scan that effectively means that the timing on it is very effective. So let's just take a look at, for example, in our undervalued stock list, we have, 13 stocks that are 13 stocks that are also bullish from a technical perspective, in addition to this being a list of stocks that are undervalued. And I can't tell you enough how important it is to, just because you have a stock that's undervalued or overvalued that you really believe in, what you want to do is you want to you want to make sure that you want to make sure that you are using this properly, and you want to make sure that you understand, how they are generated, because aligning the timing with the technicals is really important. Because if you simply buy something because it's undervalued, you could find yourself sitting on that particular trade for quite some time. Versus if you are more patient and you wait for the timing to be correct, you're going to be able to potentially turn a profit much, much faster, and you're able to do it with far less risk than you think you might be, that you might have to take when you're identifying these undervalued stocks that have kind of that bounce potential. So, a couple of ones that I was looking at earlier today were Adobe was one that I was looking at here. Adobe is so oversold that there's that bounce potential here, but more importantly, it's a very undervalued stock. So when you have undervalued stocks, they can tend to make big moves here in the opposite direction if you get the timing right. And that's exactly what we're focused on here right now, is to help you get your timing right so that you can be far more efficient with your trades and try to make a profit much, much quicker so that you're not tying up capital on every single trade. Bank of America is another one that we've been looking at here as well. So if you look at a chart here for Bank of America, as you can see, it recently really broke down here between that 43 and $48 level here. It broke down here, retested it as resistance, and broke down here again. And the question is whether or not we're going to get another retest of resistance, probably somewhere around 40, 41, 42 on Bank of America. That would be kind of your upside target. And if that stalls there, then you have the potential for this to move substantially lower from where you are. Alphabet is another one that we quite like given the current market conditions. You've got the, what is effectively a pretty strong sell-off here in Alphabet. And it's gotten to a point where things are so overbought, there's a buying opportunity. So what we're trying to do is save you hours and hours of research to, number one, figure out what stocks are overvalued or undervalued, but then quickly at your fingertips, being able to identify which stocks have generated a buy or sell signal for today, because that's going to factor into, the ideas that we put out and the ideas that you might want to trade using our tools. And then when it comes to debit spreads, the rule of thumb for managing these things are really easy or fairly straightforward. You just have two rules, one for take profit and one for stop loss. Once you lose 50%, it's time to cut your losses. Once you've gained 100%, it's time to start taking profits. So the rules around these are pretty straightforward. Now, like I said, we have the portfolio tracking and paper trading, which I highly encourage. But if you want more on these strategies themselves, I did record a session here a couple of months ago on these specific strategies. So if you want some of those in-depth examples of trading those specific strategies, then you can point your phone to that QR code on your screen. That's the video that we recently posted a couple of months ago on this specific topic and how to trade bear markets. But today, what we want to do is spend a little bit more time on the platform and show you, and just show you how you can find the best opportunities from a timing perspective. How can you align those timing opportunities with the fundamental data? And it's all designed to help you put the odds back in your favor when you're trading bearish positions rather than fighting an uphill battle where 60% of trades move higher, only 40% of them continue to move lower. And with that, that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding of, number one, the different tools that you do have at your disposal at OptionsPlay to help you identify bullish or bearish stocks. The paper trading tool to help you, test out strategies before you choose to, deploy your real capital with it. And then, some strategies that you can utilize this type of market environment that can help reduce the overall risk as volatility is quite high. Buying options is very expensive and also quite risky. So in this particular environment, I think it's better that you choose to practice, you choose to get familiar with the tools, because over the next few weeks, I expect the volatility will likely be back and will be catering towards, clientele that have substantially more capital. So with that, what I'll do is I'll open this up for Q&A. There is a Q&A section and there's a chat window. If you don't mind, type your questions into the Q&A window, and I'll try to answer your questions in the Q&A window. Okay, I see a lot of questions in the Q&A window here already, so let's take a look at this. So there's a couple of questions, regarding the 0 days to expiration email that we sent out yesterday and this morning, about, the fact that there's no trade idea with it. And for now, there isn't going to be a trade idea with it. The goal of that email is just to help you understand the direction of the market on an intraday basis. I don't think I'll be sending out a trade idea alongside with that at this point. I do think if there's enough interest in 0 days to expiration trading signals, please let our support team know the same way you contacted our support team earlier this week. Let our support team know, and they'll let me know in order for us to potentially add that as a service. But at the very least, what we wanted to do is we wanted to show you, here are the indicators that we use to try to gauge a directional view on the markets using those 4 indicators. And what we're doing is giving you that insight on a daily basis so that you can be nimble and be happy, knowing that you have a better shot of navigating the volatility on an intraday basis. Seems like the banking institutions are doing well. Yes, the banks have held up fairly well here. We'll see with JP Morgan's earnings at the end of this week what their guidance here is for 2025. And in terms of, just in terms of that, I think it's important to look at stocks that are both undervalued and overvalued, because it's important to have a fundamental component to your trades. Just relying on technical analysis, I tend to find, is not enough in a lot of cases, and that mistakes can be avoided if you just have a better understanding of what a company does on a fundamental basis. So you think it's okay to park some money for safety in TLT? Now it's now 90, and wait for TLT may come down soon. Where do I think TLT will trade short term? Great question. This is another thing that at the moment that we don't have a it's really hard to say, because the treasury market is uh, by far kind of the largest risk-free bond market in the world, right? But that designation is eroding, and the tariffs and the trade war that's currently happening is part of that unraveling of kind of consumer confidence, consumer spending, airlines and hotels doing really well, that now all of a sudden won't be the case, because uh, just simply because the U.S. debt load has significantly increased. And the question is whether or not we can bring down the debt ceiling fast enough to kind of offset any downside risk that we could have with the US dollar. So, with that in mind, I think just be careful about TLT. A lot of people want rates to decline and for TLT to rally, but as you can see over the price action over the last couple of days, TLT clearly not quite buying that, and is I think the focus right now needs to be on kind of reading the intraday tape and understanding on a smaller time frame where the markets are headed. Is paper trading supported? Yes, we have a version of paper trading where basically you can add a position to the paper trading portfolio. You can make adjustments to that position, and everything will reflect into your portfolio as if it was just any other portfolio. So you can have your paper trading portfolio within OptionsPlay as well. That is correct. Someone's asking, I do not see a drop down on watch list for undervalued stocks. So you have to go to watch list, click on the drop down. It is under global. And if you scroll to the bottom, you'll see we have both a list for undervalued stocks and we also have a list for overvalued stocks here as well. So you get both that you can potentially use for finding opportunities. So as you can see, the overvalued stocks here have 65 names in it. The undervalued stocks have about 66 names at the moment here. All right, let's see. Looks like that's already been resolved. Um, I saw quite a few customers asking about the watch list. Hopefully, I just showed you how to do that. It's under you go to watch list, you go to global, and then you could scroll down to that both undervalued and overvalued list. On my screen, I cannot see the third research line under watch list to select ones with trade ideas. What am I doing wrong? Oh, you just have to be able to scroll. So, you just scroll through this global list in order to get access to it. There's a question here with regards to selling a cover call on a stock that they own and what to do in this market environment where you quickly make, 50% of the max profit on a cover call. Generally speaking, once you make more than 50% of the profit on a short option contract, so whether that's short puts or short t-shirt, um, you generally can take profits as soon as you reach 50%. The question is, I think the secondary question is, do you reset to that cover call? It depends on your cost basis on the stock itself, obviously, because if you bought it at 125, you're still underwater on that Nvidia stock here at the moment. A lot of traders don't like to roll their strikes lower. Um, But from my perspective, I think that in this type of market environment, it makes sense to sell cover calls. And if the market kind of turns around very quickly, and you have a fairly sizable profit here from your um, sizable profit from that, that's really where I do think that you can roll those cover calls early, in my opinion, and actually roll them, not just close them out. I thought this platform would provide a trading signal. So the best trading signals come from the ideas section. Um, try to look at kind of whether we so for example today the intraday signal was a bullish signal at the open. Things have started to turn a little uglier here in the last couple of trading sessions. If you look at advances versus declines, we had about 2,200 more advances than declines. At the moment, that's down to 200 or so. Volume has certainly skewed more to the downside. The cumulative tick has kind of been firmly negative here since noon. So things have really started to deteriorate a little bit here over the last little bit. That leads me to believe that, this could start moving materially lower here on the S&P 500. When is it recommended to buy puts? Well, I mean, these bearish trades that we're identifying here are prime candidates for buying puts. Basically, in this type of market environment where you are expecting things to move very quickly and just very quickly, using things like the jam are, when things are moving this quickly, buying puts are sometimes the best ways to profit from this. Really short dated puts, just under 1 week out would be the best way to think about trying to take advantage of this downside or getting that downside exposure. And buying puts also gives you unlimited downside exposure here right now. They're going to be expensive, but if you're thinking about buying puts, using kind of the bearish trend following signals here on OptionsPlay would be your best way to time when to actually buy those puts. Someone's asking about, can we do a weekly trading session, a weekly session where we kind of go through live trades. And we've definitely been getting some feedback along those lines. We're currently trying to organize our events so that we can do that on a weekly basis. But in the meantime, our Monday morning webinar really is the best place for you to go at the moment, because we go through a full review of our macro view of the markets, and then we dive into each individual trade idea that we have for the week. And our expectation is only going to increase the frequency of all of that, meaning the publication of our reports, the weekly events that we'll do to kind of go over the trading aspect of things, the 0 days to expiration newsletter that we're sending out here to give you kind of an idea of what the markets are doing intraday. These are all things that we're trying to add here to help support you and help you navigate through this, what is effectively the craziest volatility I've seen in a very long time in the markets. With that, that is all the time that I have here for today. I really hope this is helpful in giving you a better understanding of just, how to navigate a bear market, the different things that you should be thinking about as you trade a bear market, and the different tools that we, either have in OptionsPlay or the tools that we are currently providing you as a result of the current trade war to help you just stay on top of things, understand, where the markets are headed, and help you make better trading decisions by trying to automate as many of the steps as possible, from idea generation to setting up the option strategy, and being able to, paper trade it or execute these trades into your broker's platform. Hopefully, I've been able to show you some of that here during today's session. So with that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here tomorrow when we're going to be covering shorter dated options with zero DTE and the different indicators that we use to trade that. And if you don't already have access to OptionsPlay, sign up for a free trial at optionsplay.com. sign up, or just point your phone to the QR code here on your screen. Thank you so much, and I hope you guys have a great trading day.